Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly support and demand area, or better said, it is about to test this quite strong monthly support and demand area. It is very, very close. This zone, in fact, was acting as previous support here, preceding all this rejection to the upside, again acting as support here, preceding the creation of this green candle, then again was tested as support here, then the market broke below that zone, now it broke back above. And usually when you see a quite strong level and the market is testing it multiple times, and then you see a fake breakout below and then break back above, after that you would expect the test and then a strong rejection to the upside. So in a situation like this, what we could expect is first a correction and then more potential bullish continuation. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see the creation of a textbook uptrend. We can see how we're having higher highs and higher lows. The last move was an impulse and the creation of a new higher high. So now it's time to create a new higher low. So to see first a correction and then more potential bullish continuation. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, the situation is quite clear. We had first from here the creation of this M pattern, then we wanted to see the completion. And in fact, I did speak about USDCHF quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect a rejection to the upside. Then after this move higher, I made another breakdown explaining all the reasons for which we could expect first this impulse correction and then from here the continuation to the upside. And again, that is exactly what the market gave us. And with the very last analysis, I explained all the reasons for which after this impulse and correction from here, we could expect the creation of a new daily higher high. And in fact, that is exactly what the market gave us. And by the way, I will link in the description all this previous analysis so you can go and check them out for more free education. Now, continuing with analysis here from a daily perspective, what do we have? Well, if we look at the pattern, we can see impulse, correction, higher high. Now the market is moving lower. If we will see more bearish continuation, we would have the creation of an M pattern. And after the creation of an M pattern, we could expect a potential move higher, completing this M pattern at the neckline, which is the previous support turned resistance from a daily perspective. So what we could expect here is a bit more bearish price action and then a rejection to the upside, completing the M pattern, which would also create a deeper correction that we wanted to see from a weekly perspective and then the continuation to the upside. So the two time frames are perfectly matched. Now, if we go and see what we have when it comes to the commitment of traders on the CHF, so what hedge funds are doing on the pair, what do we have? Now, first of all, if we're looking at the data just for the CHF, we're actually looking at CHF USD because all currencies on the spot are traded against the USD. So since we're analyzing USD CHF, we simply have to reverse everything. And what we can see here is that institutions went from having a net positioning of minus 3.9K all the way down to having minus 21.9K. So institutions have been moving aggressively to the bearish side for the CHF, meaning to the bullish side of USDCHF. In fact, shorts got increased from 14K all the way up to 38.2K, and longs, we can see how more or less remained the same, but anyway, got slightly decreased from 16.9K to 16.3K. So institutions have been longing USDCHF and at the same time closing their shorts. So in a situation like this, they do expect more bullish continuation for USDCHF, so more weakening for the CHF. This means that if we will see the creation of this M pattern, we would have good probabilities of getting the potential push higher, completing this M pattern at the neckline, because if we get a push lower, we could expect more institutional longing inside of this zone. So if we get this push lower, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and in the description, so you never miss new updates. Now, back to the analysis. As I was saying, if the market creates this push lower, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COD data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily M pattern at the neckline. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.